Hi, today I and my team will present about the financial position and performance of company IOI Groups, KLK, Sandavi, and also the FGV. So the presenter is Nur Afrina, is me, and then Siti Nur Nabila, and then Nur Fatiha, and then the last person is Muhammad Alif Safwan bin Muhammad Najib. Okay.
Today I'm going to start introduction about plantation. The plantation industry is a very big important to Malaysian economies, especially in the oil palm sector, which makes the country one of the top exporters of palm in the world. Other crops like rubber and cocoa also support the industry, but it's through a smaller scale. And for the overtime, the industry also has changed from traditional to modern technology-based system. Big companies also now manage everything from planting to selling product. New technologies such as satellite monitoring and data analysis help increase the production while protecting the environment. The plantation industry today must balance between making profit and being responsible to sustainable for the future.
So, as we learned in the class past away, we have 5 classification of ratio. Now, I will start to explain. First ratio is liquidity ratio. It has 2 ratio, which is current ratio and quick ratio. So, for current ratio, its function is to measure company ability to pay short-term liabilities with current asset. So, in this slide, let we see in a line graph. IOI Corporation Berhad has a steady increase from 1.78 to 3.15 and shows strong and improved liquidity. So, for KLK company, start high in 2022, which is 2.04, but dropped to 1.33 in 2024, indicating weaker financially strength. So for third company is Sandabi company, improved in 2023 but slightly dropped in 2024, showing some inconsistency in ratio. So last for FGV company, stay low at 2022, which is 1.17, and 2023 improved sharply 2.35 in 2024. So overall for current ratio is IOI has the best performance, KLK company was the weakest in 2024, and FGV company show the most improvement. So we continue. For a net liquidity ratio is quick ratio. This ratio functioning to measure ability business pay short-term obligation by having asset that readily convertible into cash. So as we show in this slide, see the line paragraph here. IOI consistently show the strongest liquidity increase from 1.35 in 2022 to 2.38 in 2024, indicating its strong ability to meet short-term obligation without relying on inventory sales. So for next company is KLK, started at 1.26 in 2022 but decreased to 1.04 in 2024. It show weakness liquidity. So for Sandabi company, improved from 0.65 in 2022 to 1.66 in 2023 but slightly declined for 2024 is 1.42. So for last company is FGV company, show steady growth from 0.5 in 2022 and 2024 is 1.15. So FGV is showing improved liquidity. For overall quick ratio is IOI maintain the best quick ratio performance across the year, and while FGV company show the most significant for positive change.
Hello, hi, Assalamualaikum. My name is Siti Nurul Nabila. So I will present about leverage ratio. In the leverage ratio, we have debt to equity and time interest and referring to the four companies here, which is FGV, Samdarbi, KLK and IOI Corporation. As we can see the above graph, KLK has the highest in 2024, which is 0.98. And this is a cause the company's situation be in danger due to sudden increase. That is followed by FGV, whose amount has increased slightly in the past 3 years. In addition, IOI Corporation Berhad also show a decreasing amount from 2032 to 2034, although the amount has not decreased that much, but we can see the improvement. That's all for debt to equity. So we move to the next slide is time interest earned. Based on the referring graph above, we can see that FGV time interest earned increased each year, rising from 15.07 in 2022 to 32.21 in 2023 and further to 46.99 in 2024. In contrast, KLK show a worsening trend, which is time interest earned declined sharply from 2022 to 2024. This is similarity with IOI Corporation has dropped significantly, reaching to 9.58 in 2024. And also we can see that for Samdabi, the ratio show a declining trend, but the rate of decrease has lowered down each year, indicating a more gradual and stable drop in its ability to cover the interest expenses. That's all from me for leverage ratio part, debt to equity and time interest earned. Next is I will present about activity ratio. Activity ratio contain 2 points, the average collection period and also the asset turnover ratio. Okay, so let's see to average collection period. IOI collection period increased from 50 days in 2022 to 52 days in 2023 and further to 62 days in 2024, indicating a slower cash collection. KLK also experienced an increase, rising from 26 days in 2022 to 35 days in 2023 and remaining at 35 days in 2024. In contrast, Samdabi improved its efficiency significantly, reducing its collection period from 49 days in 2022 to 41 days in 2023 and down to 26 days in 2034, while FGV keep its collection relatively low and stable with 19 days in 2022, 26 days in 2023 and 25 days in 2034. Okay, so that's all for average collection period. Okay, so we move to fixed asset turnover ratio. Based on the graph, we can see that the fixed asset turnover ratio show that IOI has been declining steadily from 0.61 in 2032 to 0.53 in 2023, 4.2 in 2024, indicating a less efficient in utilizing the fixed rate asset. KLK and FGV also decreased from 2.24 to 1.96 and from 3.31 to 2.73 respectively over the same period, suggesting weaker use of the fixed asset. In contrast, Samdarbi has shown a strong improvement, sharply from 12.27 in 2022 to 23.3 in 2023 and reaching 26 in 2024, and this is reflecting its effective use of fixed asset to generate revenue. So that's all from me to present the leverage and activity ratio. Thank you.
So hi guys, welcome back with me. Now I will explain about fourth ratio in classification, which is profitability ratio. Now we have two ratio that we have calculate, which is gross profit margin and return on assets. For gross profit margin ratio is functioning to calculate percentage on as sales that's exceed the cost of goods sold. So like we see in line graph here, Samdabi company has consistently shown strong profitability. that started from 2023, the Sunderby have 27.75%, the highest among all the company in years. So next, for IOI company has steadily declined from 18% to 60% from 2032 to 2024. Similarly, with KLK company, dropped from 18.32% in 2022 to 30.73% in 2024. Last, for FGV company, had the lowest margin throughout and improved from 6.16% to in 2022 to 9.59 in 2024. So for overall gross profit margin in this for all company, the graphs highlight Sunderby has the most profitable company in 2023, while IOI, KLK and FGV company show either slightly or decline for profitability trends. So for a second profitability ratio, we have calculate is return on asset. For return on asset ratio is functioning to evaluate how efficiently company able to generate profit with their asset available. So let we see in the line graph here. In 2022, IOI recorded the highest ROA at 9.20, followed by FGV company at 7.34, while Sunderby has the lowest is 2.67%. Therefore, IOI return on asset has declined to 6.20% in 2024, while FGV company shows significant improvement, rising steadily from 2022-2024 from 7.34% to 7.97%. So, it's making FGV company the best performer by 2024. Next, for Sunderby company, ratio of return on asset also increasing to 6.37% in 2024. Conversely, KLK company return on asset consistently dropped across 3 years. From 2022-2024 from 7.16% to 2.42%. So, overall for return on asset, the graph highlight FGV's strong upward trend in profitability relative to its asset, while KLK company performance declines steadily. Thank you.
Hi, Assalamualaikum. My name is Professor Shafrina. My nomenclature is 2024476226. So I'm here to explain about the market ratio. Market ratio is a financial measure that show how a company value in the stock market. So here, from the 4 company that we discussed from IOI, KLK, Sunderby and FGV, okay, so the dividend payout ratio is will be better to have a lower value for a company to be more stable in the long term. From the graph that can be seen from 2022 until 2034, the first is the most stable that the company maintain income better than payouts of the dividend. From KLK company, we have a high increase in 2023, but a slight drop in 2024 maintains a healthy dividend payout. Okay, next the Sunderby. Payout has a big drop in 2022 until 2024 to retain the profits. Lastly, an FGV has a good place but is slightly high in 2023 that can make the company not stable for long term, then dangerous to the company lah. Okay, so that's next is the highest dividend payment 2024. Focus on of FGV at a 14%, which is indicate the use accumulate earning or payment since their income, which is unsustainable. So from this from this market ratio, the perfect is the means the company that maintain income better than pay out dividend is a KLK. Next is a price earning. For get a price earning, we have to search for market per share and divide the earning per share. Okay, so from the graph that we can see, the based on the graph that KLK company is one of the growth areas better than IOI, but still has a good for performer. From the same W and FGV can possibly undervalue and need to improve to be better. After saying that KLK has a sharp increase of 44.7 in 2024 that can make a strong market confidence, IOI also is a moderate and stable and still safe for investment. Again, next, Sime Darby is a very low 5.4 in 2024 can be potential to undervalue as a company. And then lastly is FGV. After we see the graph have extreme spike 70.3 is an unstable outlook. From the all this graph that we can see the best and the top of the price earning is more to company that KLK. Okay, so that's all from me. Thank you.
For our conclusion about plantation industry in Malaysia, is remain as a vital part of Malaysian economy, especially in a rural development and export earnings. With major crop like oil palm and rubber, the industry contributes significantly to employment, GDP, and trade. Despite facing challenges such as fluctuating global price, climate change, and sustainability concern, ongoing effort in innovation, technology, and environmental practice are helping the sector remaining competitive. Moving forward, balancing economic growth with sustainability will be crucial to ensure the long-term success of Malaysia plantation industry.